All right, guys, what's up? I'll get straight into it. Pretty much just before I started my stream, I was pre-planning. Oh, I've had this pre-planned for a bit now. A US dollar against the Swiss franc distribution model, which I have just entered the short as of probably 15 minutes ago. Um, just to so you can see the higher time frame. Pretty nice looking distribution model spanning across fairly lengthy period of time. You can see we've had all these demand blocks mitigated, which is just what we want. Context wise, so yeah, range has been going on for about 38 days, which is very good. The higher the time frame, the better confidence you have for taking it. In terms of context, we have been trending down for a while, so we're sort of trading with the trend, which is good, which is what you want. And also, it is to note that we have front ran this very high time frame demand area, dating 2 day OBIF all the way from back here. And because this is such a big OBIF, you can expect price to come back and mitigate it. There is little to no chance that we're going to front run this and just go all the way back up. It just won't happen. I just don't see this happening. Therefore, given that we've just front run it, this can just be market manipulation, making people think that they have their demand or any limit orders that they've had in here have been front ran, and we're gonna get a nice little reversal, which it's always possible. The markets are the markets, but very likely that we come back down first and mitigate this demand before moving up again. That is what I expect. And based on that expectation, we have had this lovely distribution form. Yeah, as I said, span across a various amount of days. And you can see from here, we also have a fairly nice looking return to zone. Which always is good to add confluence. And in terms of our entry, we have this massive supply zone above us, which we have tapped into. I entered on obviously this is a big time frame range, and I entered on a very refined entry. Can see we've mitigated the supply area here, and I entered on the 1 minute break of structure following our 6 candle rule, meaning we have consecutive bullish, at least two consecutive bullish, at least two consecutive bearish, and then at least two consecutive bullish again to form that 6 candle rule and actual market structure that we want. If I didn't enter on that, it would have most likely been somewhere down here. But this is the next level that we're looking to break, which is on the. It's not valid on the 10 minute because we have an inside bar candle there. However, it's valid on the 5. So if we break this 5 minute market structure, we can be very confident that the price will continue to go down. However, if we SFP this market structure, if we SFP the 5 minute market structure low and wicket then come back up, we can actually expect price to do a full reversal and take out this high, which means our stop loss will be taken out. So I'm very cautious on how we break this 5 minute market structure level. I do want to see a full candle closure, not a half, not a wick. I want to see a full candle. So right now, if this closes like this, then I can expect a full reversal back up. So I will be very cautious here. Should we break this, then the The next market structure level I'll be monitoring in terms of the upwards trend is this 3 minute. This is now our market structure high. So yeah, if we don't break this 5 minute low and we start moving back up, but we break this 3 minute market structure high, then we can essentially expect a full reversal back up, and which will most likely take out our stop loss. The one thing I don't like about this movement down is, so far, if you've watched any of my other videos, including this one at the start, we do mention return to zones quite a bit, which are essentially our return to zone shows where retail traders are essentially putting their stop losses. You got your average Joe who's seen this explosive move up, so they're going to long it. We're going to break this high, we're going to keep going up. What do? They put their stop loss below here. So someone's just long this, put their stop loss here. Someone else didn't catch this one, but someone else will catch this upwards move. They'll put their stop loss here. Someone else will catch this move. They'll put their stop loss here. Same thing happens in reverse. People like myself are now potentially expecting a reversal back down after seeing the supply has been mitigated. So what are they doing? They catch this move down, they'll put their stop losses here. They'll catch this move down, they'll put their stop losses here, and so on and so forth, which creates a nice liquidity curve for price to simply bang, take out these stop losses, buy orders automatically get triggered, we pump price higher. We take out these stop losses, another buy order automatically gets triggered, bang, we pump price higher, and we keep on doing this until we've pretty much gone past this buy order and price might make a nice little wick and then maybe range for a bit more. So yeah, this is why it is very important to note of our liquidity curves, both buy side and sell side. Thus far, yeah, we have formed, as much as we have formed a nice liquidity curve sell side wise, we have also formed a nice liquidity curve buy side wise, which is why we are monitoring it very carefully at the moment. Higher time frame, this does look nice because it's a fast move down, but as I said, it is very important for us to break this 5 minute market structure low. Which we obviously have not broken yet. Hence why we have to be very cautious of what's going to happen now. But yeah, if we get a nice explosive bearish candle that creates an imbalance, that will definitely make me a bit more comfortable in this position. But as of now, we kind of have to just wait for a... So far, if this can close on the 5 minute like this, I will be very, very happy with this. We're about to close fairly quickly. So always monitor how your candles close. It's very important. We have closed. We might get a fast pump up now, which might shake out a few people, but this is a very, very good closure for our 5 minute market structure. And then we can simply change time frames for our next market structure, which is the 30 minute. Is this valid on the 45? No, it's not. So now our next, you always see what was the highest time frame market structure is valid on. You don't just randomly pick up 1 minute, 2 minute, 3 minute candle closures. You always look at what is the highest valid market structure using our 6 candle rule. So you have this little bearish candle there, doesn't matter, but as long as you have a nice stream of bullish candles, at least 2, followed by at least 2 bearish, followed by another 2 bullish, then that is fine. So yeah, this is my next market structure point, which I'll be following. And market structure low. And yeah, for anyone wondering, this was my entry, and it is a whopping 25.76 risk to reward trade, which is absolutely massive. Like, even myself, on average, you catch the 2 to 3 risk to reward trades. Sometimes you might catch like 4, 5, 6, but this is a somewhat of a unicorn, if you will. hence why it's a 25.76 risk to reward. And the target, as always, is our range low. Just like that. But yeah, I'm not going to be sitting here and watching this all the way until it hits the range low. I do like to practice the set and forget method, which is actually quite useful, and I recommend a lot of you to try to do it because you can get psyched out of the trade psychologically because you're always staring at the chart. So as long as you have your analysis set, you've got all your alerts set, then you've done your part. You let the market makers do the rest. Because as I said, our aim is to trade with them, not against them. We want to trade with the market makers. So we've done our part here. All we can do now is set and forget. We've got our alerts. We've got our market structure low here. We've got our market structure highlighted there, and that is it for now. The only other thing I would do is see if we have supply above us protecting our stop loss, which we do. So that is here. I believe it's 10 minute. Is this valid? Yes. So this always adds quite a bit of confidence when entering, when you see that price actually creates supply or leaves supply after breaking structure or before breaking structure. And this is essentially your market makers protecting their sell orders with a supply order block. So you can always be a little bit more confident. Imagine this is like a little brick wall preventing price or slowing down price from hitting your stop loss. That's the way I always try to envisage it. So this is USD CHF. Yeah, we've got as yet a very, very long way to go until we hit our take profit. All right, now we'll go from the top. Euro USD. I think I'll be skimming through quite a few of these because we've had news not too long. 6 p.m. Australian Eastern Standard. So a lot of our ranges have been invalidated pretty quickly. Shout out to anyone that called this distribution up here and let it run all the way into this demand. Fair play. In terms of this range, not too focused on it. No range, the price action. Same thing here. This price action doesn't bother me. We ran through our demand. That can go. We've got demand below us. Alerts are already set. Do we have supply below us? Above us, sorry. Yeah, borderline. Yeah, this is valid on the 2 hour. It's even valid on the 3 hour, is it? Yeah, it is. It's not an inside bar candle because the high and low are not inside of this one, of the one to its left. So we have valid both on OBIF and structure supply. So our alerts are set there. That's kind of it for this pair, GBP USD. We've ran through this demand. I do need to clean this this chart up a little bit. What happened here? Oh yes, this was the one that we were monitoring the other day, which we never entered, just because of more so because of the context. So all that can go. Should we slowly creep back up in here? This will be my extreme liquidity. That's not valid because you don't have two consecutive bullish candles. The demand that I was talking about. Yeah, in terms of AUD USD, not much really to do. Just kind of wait to see what price decides to do. It's in a bit of a dead area, if you will. So I'm not too interested in that at the moment. Let's move on to USD CAD. We are absolutely tearing through this supply. You can see this distribution mitigated our extreme demand, which is always a good take profit one target. Any extreme demand or extreme liquidity from the opposite side of the range is always a good TP1, especially if it's right at the bottom of the range. So we front ran that, and now we are moving back up into here. Whatever was here isn't really valid anymore. Same thing, USD CAD. It's kind of just in a bit of a dead zone at the moment. And we did mitigate this 45-minute OBI, but we do have so much supply above us that we can expect price at some point to start coming back up. Yeah, there is simply so much supply above us. And we are we're not really in the EQ, if you will, but we're still fairly close to the EQ, so you can expect price to come back up, given we are forming a distribution schematic here. My thought process was that we would move into this demand and mitigate it, but so far it doesn't look like that's happening. Nevertheless, it will be interesting to see what price does once mitigating this supply up here. But for now, this has been swept as well. No longer interested. I'd kind of just be patient with this pair for now. GBP, JPY. This was the other day's PO3 schematic. I didn't get the right entry, but you can see the expectational order flow so far is absolutely spot on. I entered about halfway up this manipulation leg and got stopped out on a short. Price kept climbing up for a little bit. Ran through a bit more of this more refined supply area, and so far it's absolutely rinsing down, which is what we expected, but we just did not get the right entry on this. If I can remember my entry. Yeah, my entry was somewhere here. I had like a little two tab going on like around here. And then yeah, there was a very small like 1 or 2 minute break of structure in here somewhere, which is when I shorted, but we can see we quickly came back up. We just mitigated this demand, so this was actually my error, which I pulled up on it pretty quickly. I entered with demand being below me, which is something I don't do, but because I rushed it, I overlooked this pretty critical demand POI, and price, what did it do? It respected it nicely, moved back up. So yeah, I learned my lesson there, which was good for the journal. But yeah, and so far price is now doing what we are expecting it to do. So I will definitely be looking for if distributions do form in here, because I am expecting price to go lower. So if it can catch some form of, if we can start seeing a little ranging environment and then catch something like that, then that is perfect. So as of now, we're just playing the patience game. GBP NZD. Yeah, we've kind of ran through all this. This is no longer valid. All those have been set. Next, we are compressing here on the euro against the British pound. And so far, this is kind of my range that I'm looking at. So we'll see what happens here. No real supply here to be grabbed. It's all mitigated, but we do have this extreme liquidity, which might be grabbed. Yeah, that's kind of it for Euro GBP at the moment. Nothing else really. And yeah, we do have a lot of highs here stacking up, which we can expect to get taken out. So maybe we might get like a little wick to sweep this liquidity. That's Euro GBP, Euro NZD. Yeah, obviously this accumulation model played out very, very well, if anyone took it. We front ran this these equal highs, triple highs actually. Very nice triple highs up there. I do expect a revisit though. Like, this isn't going to be a front one all the way back down. I expect these triple highs to get taken fairly soon. as of now, we have a 2-hour OBIF. It's not like it's not a legitimate 2-hour OBIF because we don't have the 2 consecutive candle rule. But I will still, when price is forming, I will still put my alerts on just to see how it develops. And then we have this demand POI below us, structured demand here. Let's see what the big dog is doing. We are in a slider pullback up here. To be fair, like we have had decent follow through for the 5-minute low, but we'll see what happens. Like at the end of the day, you are trending down, so price is allowed to come all the way back up here and create that, lower high. So it's a-okay. Moving on. Ran through this demand. We are in a bit of a no man's land here. However, we do have this decent looking distribution, which may have just been confirmed. We may have missed it. What's the context saying? Oh, man. Guys, this could literally be the top of... Ooh, man. This could be the top of the Swiss franc against the Japanese yen for a very long time. Like a very long time. Have I just caught the market high? Yeah, I guess this... Excuse me. In hindsight, what would my process have been was... Yeah, I would have just had my alert here, which never checked because it never actually got triggered because the price never hit this level, so I was not able to enter a refined short. But wow, man, you might not get a pull back into here. Like, even so, like even if you entered on like a high time frame, it would have still been... You would have still netted close to an 8RR, which is still very, very good. But you can... Just the way this was shaped up, you could have had something so refined. Like, so refined. It's like every supply that ever was in here got mitigated. Man. The price just never wanted to come back into that refined area. Fair enough. Wow. I will have this as my extreme liquidity just in case we get a little accumulation pump pre-complete flush, but man. Technically, this can be extreme liquidity as well. Yeah, definitely like expect a flush. So thought process on this pair is just look for distributions, nothing else. Just look, monitor distributions, and when they shape up, if they're clean, take them. That's all I got for you here. Beautiful, very nice. USD JPY. This is no longer a range. What's happening in here? I do like this a bit more. We have our Asia high in here. Asia low hasn't exactly been taken. This is this is a very short time frame scalp. To be fair, it's not as low as I thought. 14 hours. Technically speaking, this is my extreme liquidity. On a very low time frame, this would have been extreme liquidity. If even, yeah, this would have been extreme liquidity on the very low time frame, but we can see that got taken out here. This is therefore my extreme liquidity point, as it's very relative to the size of this range at the moment. Unfortunately, no real supply. Yeah, you've just got a little off 3-minute OBIF here, which is protecting these Asia highs. All right, that's it for this pair. AUD CAD. Not much happening in here from memory. Oh, we had the distribution model, which played out well. Played out very well, actually. And we have also ran through this demand. Nice. The amount of times I'm getting the expectational order flow correct is... I'm happy with it. We might have something down here, potentially. That's it for this pair. NZ CAD. What are we saying? Yeah, we are in kind of this high time frame potential accumulation or potential already confirmed accumulation. And this is technically our range for the time being, which has just formed. This has been pre-planned, not pre-planned, but like we've sort of said for a while that all these lows are going to get taken, which now they finally have. And yeah, this is our current range, which we will monitor to get an accumulation on. I'm going to see if I can extend the higher time frame range just so that line doesn't annoy us. That's fine. Perfect, and yeah, you can already see a nice trend liquidity curve forming here. That's it for NZD CAD. Let's have a look at silver. A lot of supply above us. There's no real demand in here that I'm seeing at the moment. Was that something there? Yeah, actually there is, which has been mitigated. So now we can kind of expect a flush down to take all these lows and take this naked low out. Maybe we get a little bounce and form some form of distribution mitigating this supply and then flushing down. I don't know. We can only wait and see. Gold. Look at it next. We front ran this extreme liquidity and this supply. We really did front run it. We can monitor this range for now. See what happens. We'll put alerts on either side. Not what we want to see, guys. USD CHF. We'll get there. And then yeah, we have this oil, which I did not want to enter, so this was my pre-planning on it. We've taken extreme liquidity. However, I didn't like to enter because of this major demand zone, but now I could potentially look for a re-entry, or for an entry because I never entered in the first place. Yeah, as I said, didn't like it. I did not want to enter because of this structured demand loss, which is very valid. However, now that we have successfully mitigated, I can look for a retest. I'll be looking for a retest of this 45-minute OBIF, which has swept extreme liquidity. So it's a powerful OBIF, which you can expect good reactions from. What does this mean, you may ask? Well, it's been set. I will remove this. Yeah, I think this was 1 minute market break structure. Could it have been a 2? No, 1 minute. And this hasn't been mitigated. This is a very clean supply OBIF, which we can expect a reaction from. Ideally, I'm expecting something like this. We might range in here for a bit more, and then we slowly start climbing up. Ideally, a distribution. Otherwise, even if it's just a 1 to 2 tap and a break of structure, that is enough conviction for me to enter. And it would be something like this. Entering here, I put my stop above here. You would enter on the break of structure, and just like with all our entries, you target range low for a nice 10.5 risk to reward on average. Yeah, this is going to be oil, and we'll monitor this closely. Very closely, alerts have been set. I'll remove this so it doesn't annoy me. That's it. What I'll do before I go is quickly get back onto USD against the Swiss franc, see what's happening. And so far, this is kind of the reaction I'd like to see. Failure of breaking market structure higher and a move back down, but only time will tell. Yeah, that's all I've got for today, guys. What is to note? We kind of have demand here, which we'll monitor as well. But yeah, my alerts have been set. I will be monitoring this for now. Bar replay. And yeah, I'll keep you updated. Thank you so much for listening, guys, ladies and gentlemen. And yeah, that's the reaction that we want to see, which is what we're getting to now. But we will also have to monitor and see the reaction of this structured demand PLI. Yeah, I'll be monitoring this myself. Once again, thank you for listening, viewing, and please subscribe. Peace.